Welcome everybody to today's episode of the Game podcast, where we interview investors from all different backgrounds in all fields of investing, with the aim of inspiring and educating you about the wonderfully interesting world of investing. And by a brief way of background, I'm Caroline Hultman, one of the co-founders of Gain. And my day job is also as an investor. So I work for an early stage venture capital fund called J12. And today's guest on the podcast is Helena Prokhorenko, who is a principal at Highland Capital. Highland is a growth equity firm focused on investing in rapidly growing European tech companies with more than 10 million euro in annualized revenue. And you're a principal at Highland. You've been there for more than 7 years. And as part of your role, I thought I would also highlight that you also sit on a number of company boards. And many companies actually that I think some of the listeners may have heard of. So companies like Plantific, the app for repairs and maintenance for home stuff, or Meditopia, leading meditation and mental well-being. So I look forward to diving into those and how you work with companies on a daily basis. So just want to say a big thank you for joining us today. We're super grateful to have both you and Highland, of course, as supporters of Gain. And we're here to talk about and learn the basics of growth equity investing, which is actually a subject, as you rightly pointed out just before we jumped on this podcast, that we haven't actually had an episode about. So really, really keen to get into that. So to kick us off, could you just give us a whistle-top tour of your career to date, how you landed in your current role, and then we'll jump into various topics after that.
Yeah, sure. And thanks for the intro, Caroline. I don't blame you about my name. It's a bit complicated, so don't worry.
I just realized, how do you pronounce it?
Prokhorenko. It's Ukrainian.
Prokhorenko.
That's where
Okay.
I'm originally from.
Oh, amazing. Brilliant.
So yeah, and actually my family, my mum and dad were both academics. So I grew up knowing nothing about entrepreneurship, investing, or anything like that. I did make websites as a teenager as a way of, making some extra money on the side, but had never really considered it as a career, or was exposed to the fact that it was an option. So my track had always been science, and that's why I ended up studying biochemistry at university here in the UK. And two things sort of happened at that time, which was, one of them was that I fell out of love with science as a career, which was somewhat unexpected. My mum would say she could have told me right away that I wouldn't like it. It just didn't suit me. And the other one is I serendipitously fell into investment banking as my first job. One of my friends, he was really plugged in with, all the internships that you have to do while at university to get your first job, etc. And he just said to me, "Hey, try this. It's good fun. Think you'd like it." And I did end up liking it. So that was my first job at Bank of America in the investment banking healthcare team. While at university, though, I did get a bit more exposure to entrepreneurship. Again, it ended up sort of organically. I was involved with our entrepreneurship society, where we organized a startup pitching competition. We had founders of bigger businesses come and talk, etc. So that was really interesting. Then I sort of was quite intrigued, so I ended up doing an internship at a neurotechnology startup in California. And then when I did my master's degree, which was in management, it's like a 1-year course. It's quite broad, but one of the modules was entrepreneurship as well. And we had a prototype competition. So we were working in teams, had to come up with a business idea with a little prototype and pitch it. And our team ended up being one of the winners.
That's
so that
amazing.
really opened my eyes to this super exciting world out there. And when I ended up going full time with investment banking, I knew that this was what I wanted to do next. And I know loads of folks, they've heard of particularly private equity, as that is quote unquote a traditional exit route from investment banking if you choose to not do that as your long-term career. But for me, it was clear it was going to be something to do with entrepreneurship. And then a recruiter got in touch and put me in front of Highland Europe, and I really liked the team. I really liked the businesses that were in the portfolio, and the strategy of growth in particular really appealed. So yeah, nearly 8 years later, I'm still here.
Oh, there. Amazing. Great testament to the fact that you're probably A, having fun, and B, also learning. But so many interesting things that you mentioned there to dive deeper on. The first one, I guess, being, you having studied something very, very different to what you actually ended up, working with in your first job. And it's a question we get so often, like, do you have to study the things that you actually go on to do, no matter if that's an investment banking role as a first job, which is very common, as we know, or if you're going straight into investing. How did you approach that? How did you think about, that transition? Was there a lot of skills that you had to learn either before, outside of, you studying or at the job? What were you thinking about that?
Yeah, I mean, because I went into biochemistry thinking I would do it as a career. And I suppose science is specific because you do have to study what you end up doing. And I grew up in Germany, so I came from abroad, and I hadn't appreciated that in the UK, actually, it doesn't really matter outside of science, let's say, in being a doctor, etc., what you
Yeah.
study. You can do any other role you would like in any other job. And in Germany, that was different, actually. So if you want to do business, you have to study business administration, etc. So in the UK, that makes it a great opportunity that you can pursue a field that you find super interesting, you're intellectually curious about, and that you enjoy doing so much work in, and then figure out what suits you specifically as a career. Of course, for investing, you've got to be numerate. Numerate degrees can help, but equally, you don't have to have a numerate degree. The maths is pretty basic, so it's stuff you would have had, even in your GCSE, right? So
Yeah.
I wouldn't worry about what you study. And for getting into investment banking in particular, there's typically a ton of training that the firms undertake for their incoming analyst class to train them in things such as accounting, finance, etc. And for growth equity, it really helps to know some of those things. But then again, a lot of the associates that we've hired recently, if I've got my numbers right, the last 4 have all been consultants, and learn these
Interesting.
concepts really quickly on the job.
It's very, very encouraging. Yeah, and I can very much agree with your observations about the amazing aspect of the UK system, where you can actually study something quite different to what you actually become after having studied. In Sweden, where I grew up, it was very much like in Germany, like you study what you're meant to be doing. But I agree that's completely liberating. And looking back at my own, student times, I would so have enjoyed studying something different. So definitely don't be shy of taking that opportunity. Do you think banking, which I guess is a very common path into investing, you mentioned that the kind of numerical part of it actually helped you set you up for success at Highland. Looking back at it now, with the benefit of having been 8 years at Highland, is that something you would advise students to go down today? Are there other paths that you think are equally as good? How do you think about maybe recruiting from the perspective of Highland?
Yeah, we typically look at folks who have investment banking or consulting experience, a couple of years, maybe sometimes also supplemented with startup experience or scale-up experience. So one of our senior associates, she did investment banking, then she went to Uber. And I think you can learn a lot of really interesting things from those 3 fields. Again, this is probably more specific to growth. In early stage, you might find a lot of great people who go straight into it, or they go work in a startup or a scale-up. So you could have that instead. But for growth, it tends to be helpful because of because their businesses are bigger, there is more data available to look at. So there is an
Yeah.
analysis component. And having done it for different kinds and types of businesses in an investment banking or consulting setting in the past, it's really helpful.
Yeah, completely agree. Yeah, in my field of VC, I guess, yeah, we definitely look at more diverse backgrounds. But as you say, as you approach growth equity, and as we've spoken about in many prior podcasts with PE firms, I think that just analytical rigor and backbone is super helpful. So would definitely not overlook that. When you first joined Highland, I'm curious to hear, what were your kind of initial impressions of the industry? What did you think the job was going to be? And what were some of the big misconceptions of things that didn't play out, or things you thought would be in one way that were in a completely different one?
It's a really good question, because I suppose it's very easy, especially when you're looking at growth investing, to almost find a comfort in the numbers. So you might, I always thought like, oh, if the business has great metrics, et cetera, it's going to be a great investment. And then there are many other factors at play: the market opportunity, the team that you're backing. Because, in growth equity, we're minority investors. We have less than 50% ownership. We're there to influence and help, but not call the shots, like in private equity, for example. So you've got to have conviction on the team, the ability to hire, to execute, to continue, finding a bigger opportunity to address, to develop the product in the right way. So that was, I suppose, the biggest, I wouldn't say misconception, but one of the biggest learnings.
Right. I can definitely agree. But I think also one of the things that makes it so exciting, like there's no one right way of being a good investor. As you say, you can't just look at the numbers in isolation. There's so many things you have to take into consideration. Let's maybe hold that thought for a second and move over to what growth equity investing actually is, because I'm conscious that we haven't defined it, and then I want to pick up on that, like what you look for in companies and how you assess companies. But do you mind just laying out kind of the definition of growth equity and what you guys actually do?
Yeah. Very happy to do that, and I'll do that from the perspective of technology investing, because we're technology investors. That means that we're backing businesses that are selling software, or they are consumer internet businesses. So, for example, one of my investments is M&M. It's a fashion brand, but they're selling predominantly online or direct to consumer. So it's quite broad. But these companies, they go through a specific life cycle. There's an idea stage, then they might, build a prototype or a concept, then they start finding their first customers, some of whom might be paying customers, and then they start to generate revenue. And I would bucket all of those in the early stage. So that's what you would traditionally think of as venture capital. There's a ton of risks though, because you don't know yet how the team is going to be doing, because they've just started. There isn't a track record to look at, unless maybe they've founded a business in the past. And the product isn't proven yet. It might not even have any customers or very early customers. You don't know if there will be enough customers. Sometimes the market is new. You have to believe in a new market. It's a ton of risk. And in growth, you've found typically already product market fit, i.e., there is a product and you know what your ideal customer profile is. We call that the ICP. And you've also got product market sales fit, i.e., you know how to find more of them and convince them to buy your product in a systematic and predictable manner. So often these businesses will then be experiencing, once they've found that, they'll be experiencing high revenue growth. It's often more than 50% or 100, 200, 300% every year. They might be profitable, they might not be profitable, but they'll have good unit economics. And that usually means that if I'm spending X to acquire a customer, then I know I'm going to get enough back from the customer to essentially make money in business. And the focus of the management team then turns away from how do we find product market fit, but to how do we scale this organization to keep pace with the revenue growth, which is scaling processes, going international, going multi-channel, scaling your sales and marketing function, which is how you acquire more customers, et cetera, et cetera. And then the journey the business goes through is often from, let's say, 50 employees to more than 300 or 400, 500 employees, from about 5 million in annual revenue to 50 million plus in annual revenue. So a ton of change happens then. And as a growth investor, and by the way, there's a spectrum of growth as well. Early growth is at the earlier rates, part of that range, and then the later part, you're helping them along that journey to, I suppose, achieve that vision and to continue scaling. You provide capital. So that's money that the business can spend on these initiatives. Often it's literally to acquire new customers. So if you're a software business, you're hiring a sales team, will be going out and trying to find businesses to buy your product. And if you're a consumer company, you'll be spending money on, digital marketing channels or offline marketing channels to get customers to buy your product. And in exchange for that capital, the growth investor would get ownership in the business, shares. So that's how it works. And when I mentioned earlier, it's minority. Typically, you have 10 to 30%. So you're an influence, but you're not a majority owner. And then the amount of money that you invest tends to be bigger. So it's maybe 15 million at the minimum, up to 75, 100 million or more if you're a really late growth investor. And the way that this industry works is you expect the business to grow. And therefore, as the business grows, the value of your investment increases. At some point, the business might be sold or it might go public. So you get more back for your initial investment. And that's the return on investment or return on capital that folks might have heard of.
Super helpful. Very comprehensive overview of what growth equity actually is. And maybe if we divide it into two parts, you mentioned, on one hand, the actual investment, and then the other aspect of your job, which is being an owner of these companies and how you work with them. If we focus on the first one just for a second, how do you actually go out and find these businesses? What does the actual investment process look like? Can you elaborate a bit further on that?
Yeah, every fund is a little bit different, so I can talk more about our process and strategy. And it's really about having your eyes wide open, ears to the ground. So in consumer, for example, it's genuinely noticing which brands are you seeing everywhere, seeing people use. So for example, Huel, another one of the businesses that we work with, we just noticed that you could see the logo everywhere. They had a very clever strategy of giving away a free t-shirt for every new customer. And they were really nice t-shirts. You could just see it everywhere. And you've got to be curious to say, hey, what's this? And, when you see tube adverts, like, what is this business? And just to try and figure it out. And on the other hand as well, some businesses, they will have raised money from folks like you, early stage investors. So having good relationships with various early stage investors, and knowing the businesses that they have backed and keeping on top of them as well.
Super helpful. How would you describe a good, or the characteristics you need to be a good investor? If we just focus on that kind of initial part once again, what are the top skills that you look for in potential candidates when it comes to, finding, as you said, being incredibly curious, I guess, and finding these new opportunities?
Yeah, I think curiosity curiosity and interest is a key skill, an attribute. It's one of those things where you are the ultimate, let's say, aim is to be right, and you form your hypothesis, I suppose, of right, I think this team, this product, this company will grow to a much, much bigger business, and therefore we will make a return on our investment. And it's not prescriptive in terms of what you have to do. You have to really show the initiative and dig deeper into the technology. How does it compare to competitors in the market, or what do the customers really think, what's important to customers, etc. So you've having that curiosity and that self-driven way of working is really important. Initiative, I suppose. And the other one is just grit and perseverance. There are a ton of people trying to find these companies as well, and great companies often don't need any capital because they're very profitable. Or they might not be profitable, and they might already have a ton of capital that they've raised in the past. So you've got to just not necessarily give up when someone says no, if you see what I mean, and continue to be self-motivated to keep going.
Completely agree with that. And just to shed a bit more light on, I guess, how you work on the investment side, because as much as you now are very senior within Highland, I guess it takes a little bit of a village to actually pull these quite large investments off. Do you typically work as a team? How big is the team? How do you divide roles and responsibilities?
Yeah, we always work as a team of 3 or 4 when it comes to specifically looking into a potential investment. We call that the due diligence phase, and that tends to be maybe a partner and a principal, or 2 partners with 1 or 2 associates, or another principal and an associate. And there are lots of, I suppose, things that are collaboratively being done. So on the one hand, because these companies are a bit bigger, there is data to actually analyze, look into. Does the data tell the same story that you might think in terms of it's a great product and you can acquire customers efficiently, etc. So that's one of the, let's say, work streams, but also competitive analysis, customer referencing, market referencing. That tends to be something that consultants will have done a lot of in their previous roles. And then
Very
also
true.
getting to know the team, not just the founder and CEO and CTO, but really all exec functions, maybe even the level below, and almost seeing how do they think, what are their priorities, what is top of mind, how can we help. It stimulates almost the working environment post-investment, so you'll see if you'll gel well, and then getting it over the line. If you find it exciting and you want to do it at the right price, valuation is a big part as well, right? Then winning it is another key part.
Absolutely, completely agree. And one thing I picked out from your discussion just now is all of these softer factors or softer characteristics that you need to succeed in the role. So you mentioned as an example, analyzing and getting comfort in management, because as you said, you're not a majority owner, so you have to have a lot of confidence that management is the right one to take the company forward. I guess softer skills is sometimes harder to display when you're maybe younger, you don't have as much experience in life. Is that something, or how do you look for early proof points that someone who is a bit younger might possess those skills? Or how do you teach your younger employees within the organization to nurture some of those skills over time?
Yeah, I think you can often tell if someone is curious, willing to listen, humble, collaborative, etc., even from the first conversation often, in the recruitment process, but also the sort of things that people end up doing throughout their life as extracurriculars, team, I would say sports or other things that where working in a team is required, for example, or, achieving something to high success against sports or music or something like that shows that you've got great hustle, perseverance. So those are some of the things. And then otherwise it's, everyone embodies, in our team at least, the same values. So the way that we work with our founders. That's an, I suppose, by example.
I completely agree. And I love that you mentioned that, because I think it's such an important part of the role that maybe isn't as spoken about. And I know if I transport myself back in time to those days when you were applying for investment banking jobs, or you were thinking about your first investing job, so much focus is on you thinking you have to possess all of these hard skills or knowledge about the industry, whereas so much is these softer characteristics that I think you can show in many ways that maybe are not the most conventional ways of showing them or illustrating them, either on your CV or in an interview. So really like that. And you mentioned the ownership part, which is something I wanted to cover also, because I think many people think of investors as, that first initial, phase of finding, diligencing, and actually investing in a business. But that's actually in reality very much just the beginning of the journey, and you have a chance to work with the companies for many, many years thereafter. How would you say you work with companies? What are the key things that you help them with? And how do you find that part of the role?
Yeah, it's again, lots of different funds are very, very different. They have different approaches. Some are really hands off, and they love that, and the founders are looking for that sometimes. We tend to be a bit more hands on, but as much as the founders want us to be. So we try and work with, per person, 6 to 8 companies at a time, so that we spend enough time and attention with each business. And typically that involves the board meetings, but all the other stuff that happens around that. So there are frequent dialogues with the various members of the exec team. There are, ad hoc things. It genuinely is super varied. So for consumer, it could be something such as, let's say, in the investment process, you think, okay, haven't had time yet to invest in data infrastructure and understanding what your customer metrics are. Let's say, a sprint on that and figure out how to best set up. And usually, to be honest, what we do is connect them with people who have done that in the past really well. Same thing with how to set up and scale your sales function if you're a software business. There are folks that are in our network that we work with who are phenomenal at that, have done that at big organizations, etc. So it's being on hand, but also surrounding these teams with people that they can learn from and benefit from their experience. And it's really fun. So it's a really fun part of what we do, because you get to help them achieve their vision.
I can imagine. Yeah, I completely agree. It's probably, I think, my top favorite thing about investing in my role is you get to work with these brilliant entrepreneurs who live and breathe their business. They think and hopefully are changing the world that we live in, and they're pushing incredibly hard. They're inspiring thought leaders within their particular field, and to be on the kind of constant learning journey together with them as the company evolves, I think it's such a tremendous way to spend your time, and also not get stuck into, habit or doing the same things over again. You're effectively constantly learning. So I very much enjoy that part of the job too.
That's right. I would say investors, in a way, bring pattern recognition, because hopefully we will have seen that journey time and time again, and some commonalities across different industries, etc., and different people who've done it. So it's applying that pattern recognition and helping founders avoid, let's say, mistakes that can be avoided.
Yeah, completely agree. Other than this, any other things that you would say are the absolute best and maybe also worst part of your job?
The worst is saying no to a business.
Yes, so true.
Genuinely, it's the worst, because sometimes it's not about the quality of the business. It's just your investment strategy might not fit the business. So you might say, okay, so we look for a certain return on our capital. It's 3 to 5x. And we might say, okay, with this business, that looks more like a 2 to 3x. And that might be fit for a different type of investor. Or let's say it's, it's maybe from a geography point of view, a bit too much of a stretch, etc. So, because these folks, it's their life and soul is in these businesses, and saying no is
Completely.
genuinely the worst part.
Yeah, completely agree. And maybe that's another nice segue into something I just wanted to touch on, which is like what's going on in the industry currently, because we know it's not the easiest of times. Very high interest rates, looming recession, and I guess in those times, finding capital for companies is even harder, and companies might be struggling too. Is that something that's impacted you and Highland, how you think about investments at the moment?
Yeah, I mean it's interesting because it's weird compared to 2021, but 2021 was an outlier year because there was just it was a bit of a bubble, to be honest, right? So we
Yeah,
see it more as
completely.
going back to normal, bit below normal. But what we find in these times, usually businesses are built in a really efficient manner because it is not so easy to do capital. So you've got great businesses being built and created. We raised our latest fund last January. So from our perspective, we're super grateful that for our LPs, etc., that we have the capital to continue investing. We're seeing fewer companies going out, to be honest, as in going out to raise capital. Some because they may have raised at a really high valuation in 2021, and they're still looking to sort of, we call that grow into it, because the expectations are different in a different type of the economic cycle. You have to be that much bigger as a business to justify the same valuation. That's what it means. And some businesses, many actually have focused on getting to profitability and not having to raise capital. So sometimes you might see folks seeing an opportunity in that and thinking, right, we might acquire some businesses, so they might go out for that. So you're seeing it's a bit different from that perspective.
Interesting. Yeah, I think that makes a lot of sense. And it's also one, I think, interesting misconception about the industry that, something may completely stall, whereas actually from a pure kind of company building perspective, if you look back historically, some of the best companies ever have been founded in really tough times. It's also a time where so many large companies tend to get rid of maybe some extra employees that are really, really brilliant and turn out to be the next kind of generation of entrepreneurs. And as you said, I think that focus on capital efficiency and profitability is well needed, and hopefully that creates a good stable of more durable companies for the next generation.
That's right.
Any other interesting?
Great time to be hiring. Really great time to be hiring.
I know. Exactly, 100%. There's always a positive when something negative is going on. Any other interesting trends that you're seeing at the moment? Things that you're particularly excited about when it comes to different types of companies that you're looking at, or anything like that?
Yeah, one of the things I always quite like thinking about is what is overlooked at any particular time, and we find that at the moment, consumer tends to be some investors tend to be less excited by consumer businesses in this environment. So we see that as a great opportunity because there are lots of really brilliant consumer companies out there, and they can become very, very big businesses, right? So look at On Running, now 10 billion plus market cap company, was a startup in Switzerland only, 7-8 years ago. So we see that as an opportunity. So that's what we typically look for. And of course, actually, if you look at the majority of our most recent investments, we haven't gone out saying we're going to do anything in ESG, i.e. environmental, social governance, but they end up having some sort of link to environmental impact, just because, again, this is where the growth is coming from. This is what end customers really want, and what they're looking for. One of our more recent investments is a business called Oritain, which is doing supply chain governance, let's say. So if you're a fashion brand and you need to know where your material is coming from, down to genuinely and almost square meter level, couple tens of level accuracy, they'll be able to do that. So it's these sort of things that we're seeing more of.
Very interesting. Very important. Brilliant. I'm looking at the clock and realizing that we should probably soon wrap up, but I want to finish off by just discussing kind of your key lessons learned and any key advice you would have for your younger self or the audience that is listening.
Yeah, I mean, I think the most important thing is to find something that you'll enjoy and that suits someone as a person and their preferred ways of working, let's say. And that might well be investing for some people. So it's really important to lean into that. And if you're not enjoying it, it's going to be really hard to convince the entrepreneurs that you're going to enjoy working with them as well, right? So,
Absolutely.
so gotta enjoy it. Find, if it's investing, find the specific sector strategy. Whether it's early stage or late stage or focusing on certain subsectors, like find that niche that you really enjoy and just stay curious and continue learning. There's so much great content out there nowadays. So that's what I would think of top of mind, at least.
Yeah, completely agree. There's almost too much content out there. It can be a bit of a jungle, but no, definitely agree. Do you have any on the topic of reading? Do you have any favorite kind of writers, blogs, podcasts, or anything that you listen to that you think would be interesting as kind of an initial peek into either building businesses or growth equity investing specifically?
Yeah, there are a few out there. Top of mind, Invest with the Best, Invest Like the Best. They've got some great interviews with Charlie Songhurst, etc., who's an angel investor. But there are always great learnings out there across different stages of investors. There are loads focused on technology in particular. How I built this, talking to various founders. If you want to figure out more about what CEOs talk about, Stephen Bartlett's podcast is pretty good for that as well. Diary for CEO. So yeah, there are tons of books out there as well.
Certainly is. Brilliant. This has been hugely insightful. I think particularly interesting also to hear the difference between VC, growth equity, PE, how you fit into the ecosystem, more specifically what you look for in investments, and all of the what sounds like very, very exciting parts of your job that you seem to be enjoying 8 years in, and hopefully will for the long-term future. It was brilliant to have you on board. Big thanks, Helena. I love chatting to you.
Thank you, Caroline. It's fun.